Good morning. This is Dylan Jovine with Behind the Markets. Happy Tuesday. Today is Tuesday, April 29th. And today I want to talk about this weekend. I sent a note to members of Takeover Targets about what I saw as basically saying to them to be very careful. We're not out of the woods yet. And the idea here is that we have a lot of, and a lot of individual investors have seen, and we've seen this in the data, a lot of individual investors have seen this market bounce. And what they're doing is they're rushing in and thinking happy days are here again. And that is just that's not how I'm seeing this. Only God knows how this all goes ultimately in the end. But what I'm seeing is we know we came into this bear market with stocks at historically high levels. There's no doubt about that. Okay. They were historically high valuation levels. There's no doubt. Okay. And into that, in the fourth quarter of last year, the third and fourth quarter last year, starting in around August, September, October, you started to see very sophisticated professionals start to unload stocks as these valuations got stretched. And as we knew that a new president would be elected who probably had fiscal policies that were going to seriously damage the economy in the long term. In the short term, it'll be a party, but in the long term, more debt, which would send gold higher. And of course, that's what we're looking at here. But in terms of the actual day-to-day, week-to-week market action, professional investors were selling, at the end of last year, and that selling has picked up this year. Just a recent bit of information out in the Wall Street Journal, hedge funds have sold a net $1 trillion of shares this year. Now, it says that Vanguard reports that 97% of their customers basically avoided trading in early April, which tracks with the data that I'm seeing. But what I'm saying is there's a lot of professional investors still selling and a lot of individual investors still buying. Especially in the past 2 weeks of April, we've seen data from global markets investors as retail investors, S&P 500 single stocks net buying hit $12 billion this month. So they've been buying a lot, which is not the sign of a market drop at all. And by the way, that is from Goldman Sachs, forgive me. So basically, you could see this in one of my favorite stocks, Meta. You can see how it's trading. Meta's been bouncing between 485 and 550. And whenever it goes up a little bit, hits that wall, but it only floats up. It gets down to 485. Big buyers like me come in there and we're buying it because we know over time it's selling at a discount. But big buyers come in there, give it a floor, but it just floats back up. It's not really, nobody's really buying it back up. It's just floating. And I see that with a lot of stocks, these stocks that are just floating back up. That tells you that they're not being bought on heavy volume, not institutional buying. So guys, folks, ladies and gentlemen, listen to me. This is a time where you want to be caution is the watchword. Okay. We have policies that are forcing companies to really cut back on plans to expand because they don't know. For example, if you're going to build a plant in Mexico or Canada or Europe, like Dow Chemical said on their recent call, they're going to hold back. They're holding back on those plants. Now, you might say, well, that's in Europe, so who cares if they build a plant to Europe? But the plant that they would build represents increased demand, basically more sales for the company. So if they're holding back on that, what they're really telegraphing is that we don't expect sales to stay at the same pace that we've seen sales come in. And I also thought something that was I thought it was quite funny, but basically, let's see here. It's in my notes for you guys here. I thought this was quite funny. United Airlines actually issued 2 forecasts to investors, which they took a lot of heat for this, but one for a stable economy and another forecast for a recessionary economy. So it just goes to show you, they're basically saying, look, choose your own adventure. We're not exactly sure if we're going to get a stable economy, depending upon the policies, if they're reversed, et cetera, or a recessionary economy. They actually issued 2 forecasts. First time I've ever seen that. I actually thought that was quite funny, cheeky. But look, caution is the watchword. Please be careful. Do not think the party is over. The drama is over yet. The party's begun again. The number 1 rule of investing is don't lose money. The number 2 rule is don't forget rule number 1. And especially as we are in retirement age or closer to retirement age, we have got to protect what we have and be very opportunistic during times like this. This is one of those times. It could become one of those times in history where stocks really crack and you get an opportunity that you get very rarely. So you want to be loaded for bear, as my friend always says. You really do. You want to play, we're playing chess here. We're not playing checkers. You want to remove that checkers mentality and focus on the long game. Anyway, that's all I have for today. Forgive the babbling. I woke up, slight little fever. It's going around with my kids and everything like that, my mother and all of us. Anyway, that's it for today. I will speak to you tomorrow. Have a wonderful day.